Hey, Steve's back, managing partner here at Roswell Capital. As you can see, here at Wall Street, or on Wall Street, New York Stock Exchange. I wanted to jump on real quick and talk about just some thoughts that I've had. Not necessarily anything well refined, but I wanted to share kind of some things I'm thinking about. So I'm here over Christmas, and you see there's a bunch of people here, a ton of foreign people. And everybody thinks about the New York Stock Exchange, they think about Wall Street, they think that's how you make money, that's how you do stuff when it comes to investing. However, if you track this stuff like I do, a couple things that you're gonna know, okay? First of all, the S&P 500 and the NASDAQ 100, which is QQQ or SPY or ticker symbols like that, everybody's like put it into an index fund, which are those types of things. Here's the thing. Blind diversification is not something that I'm a fan of. And when I walk around here, guess what? I hear so many foreign people, which reminds me of the inflow of money that's coming into U.S. capital markets like this, the New York Stock Exchange, investing in blind diversification like S&P 500 or QQQ, where they just randomly are putting money into U.S. companies. For their investments, okay? So we have tons of money coming from other countries around the world back into the United States. Not necessarily a bad thing, but it's blindly coming here. Because let's face it, you go to Japan, you go to New York, or not Japan, or not New York, you go to Europe, you go to these other countries, and the capital markets there have not competed like the United States has. So it's attracting this money from overseas. Okay, let's take it to another step. The next step, there is more retail investors participating in the equity markets today, which is the S&P 500 and stuff like that, just the New York Stock Exchange or NASDAQ, whatever, than ever before in history. Think about that. Next thing that we're going to go to. In the United States, retirement plans have went from defined benefits to defined contribution. What does that mean? We went from pension plans, where you had sophisticated money managers actually picking and choosing and doing due diligence on investments, to 401k plans where everybody's just putting it in the index funds. Just things that I think about when I walk through Wall Street, and all the voices that I hear, the accents that I hear, not American. To me, this is concerning. It's concerning because I believe the way we get rid of risk is to know what the heck we're buying, right? And so blind diversification for me is not smart. I don't know. And the reason I wanted to jump on today is like, okay, there's more things to invest in than just this right here, than just Wall Street, okay? And that's how I went from where I started here in the equities market to today, where we do private equity and we buy mid-market apartment complexes because we get good assets, leverage, and time. We can do the due diligence, we can reduce our risk. Back to the point that I was making about all this money flowing into the market and blind diversification. I don't know if that's creating a bubble or not. I do know this. If the only way that I make money in this thing is through appreciation because the dividends that this pays is not very good, then if it is a bubble, that's really not good. If I buy a piece of real estate, an apartment complex that has cash flow, I don't really care what the price does. The reason I don't care what the value of the asset does is because every month I'm still making money. I'm still getting a check written to me, okay, or to my investors. Warren Buffett says the businesses that they buy, if they're even on the New York Stock Exchange, if they're truly good businesses, this thing could close for 2 years and it wouldn't matter. So I just wanted to share this with you. This is some thoughts that I've had, and I figured I'd actually show you why I'm actually here. So let me know what you think. Like, share, subscribe, all that type of stuff. And I'll catch you next week.